Okay, so in this video we will discuss how to do the balance sheet for a capital lease item. A visitor asks, what should we do if we have a capital lease? How's the assets and liability are amortized differently in the balance sheet? First of all, the asset is amortized or depreciates using the linear depreciation, while for the liability, we have to follow the convention of the amortization of liability. In this example, we assume that a company rents an equipment. For this equipment, it has to pay 10K every year, and the discount rate is 10%. Since we are using capital lease, we have to find the present value of this payment. So let's say we rent it for 2005 to 2007 for 3 years. So at the end of 2004 or at the beginning of 2005, the assets will be equal to 10K divided by 1.1 plus 10K divided by 1.1 square plus 10K divided by 1.1 to the power 3. So this one discounts the payment of the first year, second year, and third year. And this gives us 24K. This is the asset at the beginning of 2005 or the end of 2004. And this will be the liability at the beginning of 2005 also. So the liability begins with this. So at the end of 2005, we pay 10K. Due to this discounting, the implicit interest rate we pay is equal to the beginning liability times 0.1, which is 10%. This is just like saying that we borrow this amount of money and then we have to pay this amount of interest by holding this money for 1 year from the beginning of 2005 to the end of 2005. As a result, the liability at the end of 2005 is equal to the beginning liability plus the interest minus the payment. So you must memorize this equation. And then for 2006, at the beginning of the year, of course, is equal to the end of 2005. So this is 17K. And similarly, we find the interest by multiplying this by 0.1. And we know that in 2006, at the end of the year, we also pay 10K. So the year-end liability will be the beginning one plus interest minus the payment, same as what we did for 2005. So similarly, we will do the same thing for 2006. We copy the liability at the end of 2006 to the beginning of 2007. And then we also copy the way we did the interest payment and also the ending liability. So you can see that at the end of 2007, we have paid all our at the end of 2006. So you can see that at the end of 2007, we don't have liability anymore. So this is how we amortize the liability. How about for the assets? For assets, we will use linear depreciation in this example. So at the end of 2005, the assets will depreciate by 1/3. So this will be equal to the value from 2004 minus the total asset value divided by 3. And similarly, in 2006, it will depreciate by 1/3. So it will be the carrying value from the 2005 minus the total value divided by 3. And finally, the asset value at the end of 2007 will be the value carried from 2006 minus the total value divided by 3. And this becomes 0 also. So this is how we treat the capital lease on the balance sheet. We put it into the assets column and also the liability column. At the beginning, the asset is equal to the liability. At the end, the asset is also equal to the liability. However, they have different amortization method. For asset, we use linear depreciation. For liability, we have to use this equation that the ending liability equals to the beginning plus the interest minus the payment.